All right, how's it going, friends and family? My name is Amos, and I'm going to be sharing my homework and research with all of y'all for free. So if you appreciate it, please tap like on the video. This is a follow-up to the Compounder's Corner the other day. And before you dismiss these names because of their numbers or fundamentals, I will have you know that I regret doing the same to Intel about a year and a half ago. At the end of 2024, I produced a few videos talking about Intel being a very interesting prospect, but ultimately I was going to be hands-off and that I would cheer for you guys on the sidelines. They were roughly, what, $20, $19.52. And since then, Intel 500%. You would have 6x'd your money. And the crazy thing is, if I pull up Intel on stockanalysis.com, which by the way, I have a promo code down below for a free month of Stock Analysis Pro. If you take a look at their financials and fundamentals, you have to understand what I was looking at. Leading up to that analysis and video, their gross sales were declining by double digits year over year. They had just cut their dividend. And if you take a look at their books, it was a hideous mess, right? Their cash position was getting smaller by the day, while at the same time, they were getting leveraged beyond belief. So the numbers and the data pointed in a direction I did not feel comfortable in. And in hindsight, I regret it, because the narrative and the hype had merit to it because the United States government were investing in Intel. And that's a portion of the recipe that I disregarded too harshly. I think now I understand when the US government puts their own money and Uncle Sam backs you up, the stock price could explode. Now I hate doing that because I like investing into cash producing assets that have a robust and a durable economic moat that keeps away the competition and the numbers, financials, and fundamentals looking stellar. Like I like putting my money into that. Putting my money into something that's based on speculation, hype, and narrative, it's out of my comfort zone. But if the US government has their own money invested in it, that's the one time I'll be willing to bend the rules. So in this video, we're going to be looking at the stocks with the potential to be the next Intel. Because believe it or not, the rules of the game are changing and the federal government is pumping their money into key strategic industries that in the next 10 to 20 years should pay dividends. And the US government has decided and designated the following stocks as mission critical operations that Washington will simply not allow to fail. Just like the bank stocks, just like the automakers. So here's what they are backing and why. The first category is going to be the rare earth elements. It's not financial advice. So why the rare earth elements? Well, China basically has a monopoly on rare earth elements. I think a majority of the world's supply is either refined, processed, or it's mined in China. Consequently, their pricing power has forced the current administration to go all out in sourcing our own metals and minerals instead of depending so heavily on China. Now, between you and me at first, I didn't really see the bigger picture when it comes to mining and these materials, but when you think about it, the rare earth elements, it's practically used for everything and anything, including defense systems, weapons, robotics, EVs, chips, and other advanced electronics. So looking down the road, every industry that has bullish sentiment in the future, including satellites. Now, having said that, company number one is going to be MP Materials. And they're producing and mining as of today in the Mountain Pass mine. And they're responsible for 10% of the global rare earth supply. So this is our pushback against China just being the most dominant country in this space. And they actually have a huge backing from the Department of Defense, $400 million worth of preferred stock thanks to the US taxpayers. So whether you like it or not, if you're an American, you're basically investing into MP Materials. And I don't want to go on and repeat myself because there's a pretty thorough deep dive video on the channel about MP Materials. So if you want more information, just go ahead and check that out. And the next company in this category is going to be Lithium Americas, ticker symbol LAC. And a funny fact about this company is that it's Canadian, but its business operations are all based in the US. And unlike MP Materials, is it speculative or is it established? Lithium Americas is pretty darn speculative because as of right now, Lithium Americas is more story driven than numbers because it's a pre-revenue company. Okay, sorry guys, 1 second. So a fun fact about me is that I'm a stay-at-home dad. I have my baby strapped to my chest right now. So, yeah. Okie dokie, had to put baby girl down for a nap in her own crib. She was getting a little fussy. So where were we at? Oh yeah, so if we take a look at Lithium Americas and we jump on over to their P&L, which is the income statement, you'll see that there's no top line. They're not producing any revenue. And that's what I mean by pre-revenue. They only have expenses and overhead costs to run the business. For instance, as of right now, they're spending $57 million on the payroll for all of their employees. And then you could take a look at all the other line item expenses. And then when you take a look at their bottom line, they're negative $111 million. So in order to run the business, they're losing $111 million. And that's because right now they're building out a lithium facility in Thacker Pass, Nevada. And if we jump on back over to their stock chart, take a look at the past 1 year, 77% into the green, past 5 years, negative 44%. Let's see, they debuted in the stock market at about $11.49 October 2023. Yeah, if you jumped in during their IPO, you're not a happy camper. But having said that, if you jumped into Lithium Americas in the past 1 year, you're probably happy. So as the name of the company might imply, Lithium Americas, they're trying to manufacture, produce, refine lithium here in the US. And lithium is the main ingredient for batteries that supply power to EVs, drones, satellites, military equipment, robots, and so much more. Short and simple, the United States, the goal is to build a complete supply chain for EVs and defense equipment. That's not possible if we're sourcing all of our batteries from China. And as of right now, they have a $2.2 billion loan from the Department of Energy. More likely than not, they're going to pay almost none of that back. Or if they do, it's going to be at a 0% rate, even though on paper it might be something else. The main risk associated with Lithium Americas, execution delay. They're not making any money. And that's why in this column right here, I have them as very speculative. In best case scenario, they're planning on generating money by the end of 2027, more likely than not sometime in 2028. So for me, I feel like it's speculative. It kind of reminds me of all of the rage, the hype, the smoke and mirrors associated with the various EV companies, where like half of them went belly up during the pandemic, going down memory lane, I guess, nightmares. Lordstown Motors, there was also Fisker, there was also Canoe, Nikola, all of them are obsolete. So that's the vibes that I get. But seeing as how the government has put their own money into them, $2 billion worth, maybe in 2028 it'll be an entirely different story. Having said that, Lithium America is high risk, high reward. Now moving on to the next company in this category of rare earth elements, metals, or minerals is going to be USA Rare Earth. Ticker symbol USAR. No, not United States Army Reserve. So up until this year, USA Rare Earth was also a pre-revenue concept company, just like Lithium Americas. Now, they are officially the number 2 player behind MP Materials in the race to build a domestic mine-to-magnet operation. And if we pull up USAR on stockanalysis.com, take a look at what we're working with. Past 1 year, 174% into the green. You might feel like this one's over with, it's too late, but take a look at the market cap. It's only $5 billion, okay? But what's kind of ridiculous and outrageous is the amount of money that they're generating, $7 million, and their market capitalization is $5 billion. There's a lot of hype. There's a lot of expectations baked into this one. If we do the maximum timeline, Looks like they were a SPAC in 2023, and then they officially became who they are today around here. Looks like they had a high around the end of October 2025 of $32. If you bought into USA Rare Earth for $32, I feel for you. But if you bought into them at the beginning of the year in January, 112% into the green, past 3 months, 46% into the green. So when we talk about USA Rare Earth, the growth catalyst here is their Round Top deposit in West Texas, which, believe it or not, is also known for their oil and gas reserves, but it's also uniquely rich in heavy rare earths. And the other growth catalyst that they've got going their way is the Stillwater manufacturing facility that's going to be opening up in Oklahoma to pump out the final magnets. So that's going to be the processing plant. But if you're listening carefully to my language and the wording, yeah, there's a massive catch. Neither asset, the Round Top deposit or the Stillwater manufacturing facility in Oklahoma, they're not operational, meaning they're still building it out, right? However, according to their last earnings, their timeline is being expedited and they should have commercial mining capabilities at Round Top somewhere around late 2028, best case scenario 2029. So until then, if you think about USA Rare Earth, it's a company that's only going to be generating like $7, $8, $9 million a year. And that's entirely because they've been buying up existing international companies that are in the exact same game that they're trying to enter. For instance, they just bought out Less Common Metals, a British mining company, and Serra Verde, a Brazilian mining business. And a perfectly reasonable question is, well, how the heck are they affording to buy out those companies if they're not even generating money from their own domestic businesses? Well, that capital and money, it's coming from the US government. $1.6 billion from the CHIPS Act and guaranteed buyers from the Project Vault. So once they start producing magnets, they have buyers that are going to purchase their stuff at a reasonable rate. And they also have $19.3 million from the Department of Energy and also millions of dollars from various government projects and programs. I'll be honest, friends and family, with USAR, it's hard to get excited about this one because MP Materials, they're already up and running. They're established. Whereas with this one, yes, they do have some operations overseas, but domestically, it's still entirely speculative. And my whole thing is, with the way that the stock has been pumping, 100%, 170%. I could be wrong when I say this, but it tells me that a lot of the future expectations are already being priced in for USA Rare Earth. Meaning, if there's any setbacks, this stock is going to get punished harshly beyond belief. Because if you're going to go up 170% in the past 1 year, and you don't even have your factories up and running here in the US, but instead you're relying on your British and Brazilian assets, for me it's like, looking at the AI bubble, the stuff that's roaring and soaring and going to the moon, there's a basis for that. They're generating billions of dollars when we talk about NVIDIA, AMD, ASML, Lam Research, the list goes on and on. But for USA Rare Earth, right, for their stock to be pumping 170% because of what's to come in the future, and it's not like in the next 3 months or 9 months, no, in 2029, I don't know, I feel like that's a lot of speculation and hype. Right? That's what's driving their stock price. It's not necessarily their numbers or valuation or fundamentals. It's all story driven, just like Lithium Americas. And the next strategic national priority stock that I think has a really good chance of being like Intel, it's related to domestic chip manufacturing. Why? Because right now, roughly 90 to 95% of the world's most advanced AI chips, it's tied to Taiwan Semiconductor Manufacturing Company, which is, lo and behold, headquartered in Taiwan. And that becomes a massive, a huge national security issue when you realize what China wants. China has a one China policy. And so when you think about the territories of like Hong Kong, Taiwan, and everything else, they think that it still belongs to China. And so with geopolitical tensions continuing to rise, it makes all the sense in the world with TSM expanding their manufacturing here in the US. But let's be honest, if Taiwan were to ever be compromised or absorbed by China, the global economy would feel it immediately because TSM is a Taiwanese company. And if a Taiwanese company becomes China's, the US will have no say, right? And that's why domestic foundries and semiconductor manufacturing have become suddenly super strategic national priorities. And that's why Intel is 500% into the green in 500 days. So that company, friends and family, is going to be Global Foundries. And I am almost certain that 99% of you watching this video or listening, you have never heard of this company. It's a lesser known chip making machine that physically prints chips onto wafers. And believe it or not, they used to be a part of AMD, which is crazy. I don't know why AMD ever let them go before they became their own separate entity. Now, when it comes to Global Foundries, it's not exactly like a TSM. Okay, because they focus less on the cutting edge AI chips that are made by NVIDIA, and they prioritize and emphasize industrial chips, automotive chips, the chips that go inside of the EVs that make the center console work, chips for drones and aerospace components, communications equipment, power management, and other related products. And as of right now, Global Foundries, they're getting funding from the CHIPS Act and, funny enough, the state of New York, because they have a pretty big factory stationed up there. And they're going to get potentially $375 million to manufacture quantum chips. And the crazy thing is, the US Department of Commerce, they're going to be providing Global Foundries with $375 million to make quantum chips. So if we pull them up right here, Global Foundries, ticker symbol GFS, take a look at their stock performance in the past year, 126% into the green, but keep in mind, this is a company that generates $6 billion in revenue. Unlike USA Rare Earths or Lithium Americas, jump on over to their P&L. It looks like it's been pretty stagnant and stabilized at about $6 billion for the past 2.5 years. And if we take a look at their free cash flow, I'm assuming it's not going to be the greatest because they have a lot of CapEx because they're manufacturing physical stuff. $1 billion, not too bad. Free cash flow per share is $1.92. And their forward trading multiple is a 43. Now, if you want to see something funny, NVIDIA, tip of the spear in generating the greatest and the latest AI chips, their forward trading multiple is a 21.5. So I don't care. I'm going to go on record to say, as of right now, I do think that NVIDIA is undervalued, despite them going in the green by 63% in the past year, because I have their fair value, everything going their way at $310 a share. In a bear case scenario, $275. So to be sitting at $215, I do think they're undervalued in comparison to Global Foundries. But that's neither here nor there because NVIDIA's in the business of designing the chips, whereas Global Foundries, they're in the business of manufacturing the chips. And they can't even produce NVIDIA chips anyways. They don't have the capacity. So all else being equal, when I think about the rivals, peers to Global Foundries, we have to take into account Texas Instruments. And all else being equal, I would rather go with Texas Instruments because why? I actually have a dedicated analysis video on the channel that you can look at, but I'm really bullish about Texas Instruments. Global Foundries, I feel like I'm kind of like lukewarm. I don't entirely buy into the vision, but once they do start producing the quantum computing chips, I guess the narrative, the numbers will flip. But to be at a 43 right now, yeah, I don't agree with this type of valuation from the market. And now let's talk about the next category of stocks, which are going to be related to quantum computing. The best way that I can describe it is, imagine a normal computer trying to solve a puzzle or an issue, and there's a locked door. With a regular computer, what usually happens is you'll have 100 different keys that they'll try one at a time to unlock that door. Okay? A quantum computer, on the other hand, the processing power is out of this world. In that, a quantum computer will use 100 keys all at once to that same exact door in order to get it opened. This step up in processing power, I'm telling you right now, if quantum computing becomes commercialized and mainstream, it's going to radically change everything from running data servers more efficiently to processing supply chain information from all around the world in real time at a better optimized manner. Because this computing leap from using normal computers or data centers, it's going to redefine industrial dominance. If, in fact, quantum computing lives up to the hype and expectations. Consequently, the US government, they're treating it like it's a critical matter of national security. I don't know if I believe in that vision, but I guess it makes sense, right? If it's going to be a supercomputer that's going to make our current iPhones, laptops, and MacBooks look like something that's of the past and obsolete, yeah, I guess it's the modern day space race. And that's why, friends and family, the next 3 stocks, Washington, D.C. is pouring billions of dollars to make sure that Americans are going to be at the top of this race. The first quantum computing player is going to be Rigetti Computing. And as of right now, they don't really generate meaningful revenue, because if I pull them up right here, Rigetti, ticker symbol RGTI, take a look at their P&L. It's been sitting at roughly, actually not even sitting, it's been declining. In 2022, they generated $13 million, and then it dropped all the way down to $7 million last year. For the trailing 12 months, now we can just say $10 million. So in the grand scheme of things, they're not really moving the needle too much in their gross sales, but Rigetti Computing, based on my understanding, it's a pretty interesting operation. In the past 1 year, 141% into the green, predicated upon $10 million in revenue. It kind of blows my mind as a Warren Buffett value investing believer to see a company with a valuation like that, $8 billion market capitalization on $10 million, makes my head spin. I feel like it's grossly overvalued, but I think it's because people are buying in to the vision. Okay? And so Rigetti Computing, they build everything from the ground up when it comes to quantum computing. They design and they manufacture their own physical quantum hardware and chips. They also build the control architectures, and the crazy thing is, they also develop the software used to program them. So it's a fully vertically integrated operation for quantum computing. And I think that's why Rigetti gets all of the hype and attention in this space. And they also charge enterprise customers, such as the S&P 500 companies, for cloud access to quantum processing. That way, they don't have to spend millions of dollars building out their own quantum computer, and instead they could just rent to have access to Rigetti's infrastructure. And the government, as of right now, they're giving them up to $100 million to expedite their R&D and their rollout of various projects that are in the pipeline. As of right now, I would say Rigetti is highly speculative because we truly don't know if the ROI is worth it for quantum computing or if it's ever going to be mainstream. Then again, it's kind of like being in the 1990s and thinking about the internet. Back then, we really didn't understand how it was going to radically change society. So maybe quantum computing is going to be the next big thing. But from my understanding and conclusion, I would say they're very speculative. Even though they are generating $10 million, they're burning a crap ton of cash in order to make money. And one thing that I want to circle back on is for USA Rare Earths and MP Materials, why the US needs them. And I said for MP Materials, for defense products, because one of the most essential ingredients for anything related to the military-industrial complex is rare earth elements. Likewise, that could apply to USA Rare Earth. And for them, I put the why the US needs them as China dependence. The US wants to stop their dependence on China. And this reason could also be placed right here. And that's why I have that asterisk. And the next quantum computing player is going to be D-Wave Quantum. As of right now, D-Wave, they make money through a mix of quantum computing as a service, just like Rigetti, and they sell multi-million-dollar physical hardware. And if we pull them up right here, D-Wave, ticker symbol QBTS, take a look at their 1-year stock chart. 91% into the green. What about the past 3 months? 62% into the green past 1 month. 44% into the green. Take a look at their P&L. They're generating roughly what? $12 million in the trailing 12 months. But in the near future, their gross sales should jump by at least $20 million because they signed an agreement with Florida Atlantic University for D-Wave to install their flagship Advantage 2 system right on the campus so that they can fully tap into quantum computing. But as it stands right now, to generate $12 million, that's not bad. I mean, unlike Rigetti Computing, at least it's trending in the right direction in the grand scheme of things. I mean, last year, kind of an anomaly, $24 million. But in 2020, $5 million to now $12 million, a little better of a sight to see. If we scroll on down to take a look at their bottom line, negative $368 million. So their bottom line, what's left over, is they're losing $368 million in order to generate 10, 15, 20, $50 million. So they're burning cash. Just like Rigetti, that's what I have as their main risk. The amount of cash that they're burning in order to keep the lights on. Now, as a shareholder of any other company or an operation, and I see that, I'm jumping ship. I want nothing to do with them. But with Rigetti and D-Wave, just like Intel, the fundamentals and numbers, it does not matter. The market is pricing them in to become monopolistic, top of the food chain, best in class business operations 10 to 20 years from now. The market is literally pricing in Intel to be the next TSM. Likewise with Rigetti and D-Wave to become the next NVIDIA and AMD. And after spending some time researching Rigetti and D-Wave, between the two of them, I'm really not sure who's the better option here, to be honest. It's like picking between Coca-Cola and PepsiCo. I really don't know who's going to be the better bet in the future, which is a perfect time for us to segue to talking about the last player in the quantum computing space. And don't forget to stick around until the very end because I'm going to be giving you a bonus stock. So in total, it's going to be 8 of them. But for quantum computing, it's going to be IBM. Ticker symbol IBM. It's a massive old school Mag 7 tech conglomerate that one way or another, they find a way to stay relevant. Now in the past, they used to make money from selling corporate IT hardware and computer systems, but now IBM, they make money from their Red Hat platform. If you guys remember that acquisition a few years ago, they also make money from IBM consultants that work on their software and more importantly, their quantum computing endeavors. Now for IBM, speculative or established, very, very established. Unlike the others on this list, IBM has the lowest probability of going belly up or declaring for bankruptcy, even though we know the US government will bail them out if any one of these companies head in that territory. But for IBM, it's about as good as it gets for an old, established tech conglomerate. They're kind of like Cisco and Microsoft, in my opinion. And the growth catalyst for IBM in quantum computing is Qiskit, which is currently the default operating system for quantum program development. In other words, it's the Microsoft Windows for the quantum computing world. So most university labs, corporate researchers, and software engineers, they write their quantum code inside IBM's ecosystem. So they're a toll booth company in the quantum computing world. And they're also building quantum hubs all around the world where enterprise customers can rent processing power from over the cloud. And just like the other names on this list, they just secured $1 billion of funding from the US government to do just that. And they're building America's first quantum wafer foundry in upstate New York because, fun fact, IBM is headquartered in New York. And the crazy thing is, if we zoom out 365 days, negative 2% in the red. So unlike the other names on this list, I feel like it's still early for IBM. And I think the reason why they haven't really blown up like the others is because of their software business. And as you guys know, there's the SaaS apocalypse or the SaaS sell-off. Software stocks are all just getting the really unpretty woman treatment. You're ugly, you're hideous, you smell. But as we all know, software applications are going to be the primary beneficiaries of AI. So if you think that software is going to be obsolete because of AI, maybe the tier 4 ones, but tier 3, tier 2, and tier 1, absolutely not. And the main risk with IBM I have as too much bloat because they have a legacy line of business and other endeavors that they're pursuing. And so IBM's not a pure quantum computing play like Rigetti or D-Wave. But I don't think that's necessarily a bad thing. I think a diversified business like IBM or Microsoft or Danaher, I think it's good. Because if one line of business is struggling, you have the other ones to keep you afloat, just like with Amazon. Amazon pretty much has their hands in every pocket, sector, industry in business. So when one thing is struggling, they have the other 99, keeping them thriving. And before I reveal my opinion of their Intel-like potential in that their stock price can be 400, 600%, let's go ahead and talk about stock number 8. This is the bonus one, and that's going to be York Space Systems, ticker symbol YSS. They just IPO'd back in January for $33.61, or at least that's what they were at the close of that business day. They're currently $29. And they're in the business of manufacturing low-cost satellites. And just like the 1950s and 60s, we're back into the space race where China, Russia, and the US were going gung-ho in trying to claim as much territory as possible from the universe outside of Earth. To say, ha, we have 200 satellites and you only have 150. So as they keep doing that ding-dong measuring contest, York Space Systems should be a huge winner in that fight. Now, York Space Systems, I really like, but not at a forward PE of 829. So for this one, I'm going to be patiently waiting for them to have a little bit of a pullback, or if there's a market-wide correction, I'll jump in once their valuation is at least under 500 for their PE ratio. I mean, I can't believe I'm saying that, for crying out loud. If you look at the Cheese portfolio series, you'll know that almost every single one of my holdings, their PE ratio is around 28 or less. To contemplate jumping into something that has a PE of 829, that just sounds bonkers, doesn't it? And so going down the list, MP Materials, do I think they have the probability and a chance of being the next Intel? I think they do. I don't think it's going to pan out this year or next year, but I think as their 10X facility gets closer to GTM, I definitely think their stock price is going to soar. Contingent upon the market still believing in the hype of rare earth elements, but also us not being in a recession, depression, or stocks being irrelevant because everybody would rather invest in crypto or prediction markets and gambling on sports. So for MP Materials, I think it's a high probability. And for Lithium Americas, gosh, I went back and forth with this one. I would say low, medium. Not my highest conviction on this list. And for USA Rare Earth, listen, between this and MP Materials, I just don't see why one would go with this one. I mean, it would make sense if USA Rare Earth, their stock price did not balloon by 170%, right? If it was still undervalued or still flying under the radar and they were flat year to date, then I could see the upside, that asymmetric gamble, or I guess calculated risk bet. But the fact that they're getting the same treatment as a company that's already full throttle and in their operations of mining rare earth elements, for this one, I would say medium. All else being equal, I'd rather go with USA Rare Earth than Lithium Americas. Because this one is hyper-focused on lithium, which is for batteries, whereas with rare earth elements, the application is across all sectors and industries. And for global foundries, for them to have an Intel-like potential, I do think it's going to be high. I think Texas Instruments, Intel, Global Foundries, and everybody else that's in the business of manufacturing chips domestically, I do think they're going to see pretty significant CAGR in the next handful of years. But do keep in mind that the semiconductor space historically is very cyclical. It's a boom and bust type of space. It's not constantly going to be soaring to the moon. Then again, that could change. Right? It's 2026 and we're finding out that almost everything requires a chip. So maybe it won't be cyclical like it was in the past. Actually, on that note, I would say it's a medium. I think if it were Texas Instruments, I would say high, but for Global Foundries, a medium. And for Rigetti, I think for this one, gosh, we really don't know if quantum computing is ever going to be adopted at an enterprise level across every industry and company. I mean, I see the value add and the vision, but you have to think about the ROI, right? Will it make that much more of a difference for your company to be paying millions of dollars in order to utilize quantum computing? I don't know. I truly don't know. I mean, I've watched the YouTube videos that explain how amazing it is and the potential. Having said that, before I turn 45, I do think that quantum computing will be more mainstream. But to see Intel-like returns of 500%, I don't think so. But I do think Rigetti and D-Wave, they do have the potential to hit like 200, 250% in the next like 5-ish years or so. I mean, to stop myself, I am speaking out of my comfort zone. I might be out of my lane, right? Quantum computing is not my level of expertise. It's not something that I truly understand. I mean, I watch like, 9 YouTube videos that explain what quantum computing is. I'm more of a business strategy guy. But if I were to make an educated guess, I do think that quantum computing is going to be super relevant and could be the next NVIDIA of the future. Despite me thinking that Rigetti and D-Wave will yield about 200%, maybe 250% in 10 years, I think the markets will probably disagree and they'll probably go like 500, 600%, which will be kind of like Intel. So I guess we could say something like low, medium for both. And then when it comes to IBM, I mean, this one might come as a surprise, but for them to have an Intel-like potential, I just don't see that happening. I think IBM, as they progress in their quantum computing endeavors, I think they're going to continue to see modest gains. And that's because their market capitalization is a lot bigger than the others on this list, right? If we pull them up right here, $230 billion. I mean, I think like 20 years ago, they were one of the top 7 stocks. They were a Max 7, but eventually Microsoft, Amazon, Tesla, Google, they pushed them down further on the list, but they're still trading at a $238 billion market cap. So for them to see 100% returns in a single year, it's kind of difficult to pull off. I'm not saying that it's impossible, but it's harder for them to see numbers like that. So what I'm saying is if your risk profile is similar to me and you don't have that much of risk tolerance and you would err on the side of something that's a little more safe, I mean, there's no such thing as a safe equity in the stock market. I kind of disagree with that because when you think about the utilities, when you think about the grocery stocks, when you think about the stuff that humans need in order to survive and sustain life, I feel like that's relatively safe, especially an index ETF that gets all of it, like all of the grocery stores or all of the utilities. But nonetheless, IBM, I would say, is the safest out of this entire list because they already have a tried and true proven business model with their software. But the fact that they're venturing out into something that has unlimited potential in quantum computing, I can see IBM having a market beating return for the next 10 years. I would say something like a 20% CAGR year over year. I think right now the sentiment surrounding software is really negative, and I think that's what's weighing down their stock. So relatively low risk and moderate upside. Me personally, out of this entire list, I'm going to add IBM to my watch list and MP Materials. I think if there's a pullback into either one of them, I would like to jump in. But for these 5 right here, I do think if the vision pans out to be true and the investing thesis plays out exactly like Intel, where the government puts a lot of money into them, but they also execute and they're able to get it up and running, all the CapEx turns out to have a good ROIC, I think these 5 will also yield really good results. It's just a matter of personal preference and risk tolerance. For me, the fact that MP Materials is already up and running, and this is like their 3rd or 2nd facility that they're building out, it gives me a little less hesitation, especially with this one, like Lithium America, because they're not even making money, right? Absolutely speculative. And with IBM, I kind of think of them in the same ballpark as Oracle, Microsoft, SAP. So there you have it, folks. The strategic national priority stocks. I guess we could also throw in York Space Systems right here. Let me know your thoughts down below in the comments section, and I will talk to you guys next time. See